Hi, and thanks for tuning into the Ask a Private Lender podcast. As always, I'm your host, Lawrence from Mortgage Automator, joined by Joseph Fuchs. And today we're joined by Ryan Spence from PHLX. Job title, I mean, he leads the PHLX broker channel. He's been in the industry for 20 plus years. You probably know him. Sits on the board, the president of the Alberta Mortgage Brokers Association. Ryan, thanks for stopping in today.
Well, I appreciate it, Lars, and Joseph. Good to see you guys again, and have a good chat for the next little while.
Well, we are really excited to have you come by. New changes, obviously. Everyone wants to hear directly from the source what's been going on. But before we jump into that, let's talk about your role with PHLX and how you got there. So, you lead the broker channel. What does that mean? What are you in charge of? Who do you deal with?
Yeah, it's definitely a good question. My typical answer is if the word broker and mortgage appears in the same sentence, then that's in my responsibility. Okay. So really, I run the team of one, which is me on the broker-facing community. So basically, if you're a broker coast to coast, there's a large chance that you've dealt with me setting up your brokers or with questions or as you're moving around, or if you've got questions on what happens in the industry, it's probably a chance we've chatted in the past. I've been in the sort of PHLX world for about 20 years. So there are brokers that I'm dealing with today that weren't born when I started, and others that were kind of my age or now retired. So there's a good cross-section of everybody in the country. You're
seeing people come and go.
Well, actually, yeah, there's actually kids of brokers I dealt with 20 years ago who are now brokers themselves. So there's some sort of generational switch, which makes me feel far older than I really should be.
So PHLX is a technology company. I don't know if you guys consider yourselves a tech company per se, because you're so heavily involved with brokers and the broker market. Do you come from a tech background prior to PHLX, or?
No, yeah, so my story is probably a bit different. Officially, I have a degree in evolutionary theory. So I'm trained as a biologist. I went to University of Western Ontario in London. This is 20 odd years ago, when biology and ecology and environmentalism weren't quite as important as they are today. So I did a degree in biology, did some field research, and then focused on ecology and evolutionary studies. That didn't pay the bills as well as you might expect, despite its awesome sounding handle. I spent 3 months working on a contract, and the last 2 weeks of any 3-month contract trying to find the next 3-month contract. So rent and food became a bit more of a priority. So I had to make a bit of a switch. It just so happened I was playing hockey with a guy I'd gone to school with who was working at this little company called Centric Systems, who said, "Hey, we needed some guy on the help desk. We've lost one of our staff, and you're looking for a change of job. Why don't you try it out?" So 20 odd years ago, I started working as a help desk rep in what was then the Centric Systems, which ultimately became kind of the precursor to all of the various iterations of company that you've seen until PHLX has arrived. And wow. I think I want to say in the 20 years, we've gone through 7 purchases or sales, and changed the names a bunch of times. Fortunately, my phone numbers stayed the same throughout the entire stretch. So I always figure as long as someone has my number, regardless of what the company's called, they'll be able to get to me. So now, after 20 years, from Centric Systems to PHLX to DNH to Finastra to now PHLX, a Finastra company, I've had a lot of different logos, but at least the same phone number for the whole time.
And you are consistent with the company, no matter who's buying, selling, it's still going on, changing names. You're still around. People know who you are. They've met you over the years, and you've been in the same. I mean, I guess you changed roles over time, so you're quite familiar with. I don't want to say all aspects, but a lot of the aspects of the system. So people can definitely rely on you for help and assistance.
Well, I like to think so. I think that's one of the things I really like actually about the broker channel is it is very familial, right? There's so much history that I've got with a lot of people that they do ask for help, and they call and say, can you help me? And again, anytime one of your friends calls and asks you for help, it's something you really want to do. So it's very satisfying to be able to help your friends when they call, and that's kind of what it feels like on a day-to-day basis. And you're right, my role's changed, and as the industry's evolved and the broking community and the technology's involved, my roles have evolved as well, so that kind of my job, kind of changes every, 18 months to 2 years, just because that's the nature of change within the industry and within the community.
So let's jump into the private mortgage space. Definitely an area that's been growing rapidly over the years. I don't know how many billions are poured into the private mortgage market every year, but it's a really big number. How long have you guys been looking at that space and saying, we know people are using, or brokers are using our technology, and they're printing the apps, they're printing the bureaus. We need to do something about this. For one, security and transparency to the borrowers themselves, for Equifax requirements and so forth. Is this something that's been on your radar for a very long time, and it's only just come to a point now to make a move on it?
Yeah, I would say so. Yeah, years ago, we did have software that was used by a fair number of private lenders. For those that have been around for a while, you might remember the old lender-based software, which was kind of the lender equivalent of the mortgage-based software that the brokers use. And this is going back, 15 years. And that was, originally lender-based was more on the institutional lending side, like big lending companies would use it. But just as it got older and the technology advanced, those bigger companies needed more kind of aggressive and more enterprise level software. That lender-based solution just kind of drifted down to the smaller lenders, and a lot of them were private lenders. And then that worked for a little while. But then at a certain point, and really it was when the Castle legislation came in, that kind of came the end of the lender-based era, because a lot of lenders were using that to distribute email, and Castle's kind of kiboshed all of that. So that lender-based software, it was pretty old, didn't really have a replacement, so it just kind of died off. And one of the things we tried to do, and this is going back 6 or 7 years, was to find a solution that would appeal to private lenders who didn't have a large budget for technology, and each had some different need for the technology. Maybe 80% of their elements were kind of core, but the other 20% were highly configured or customized. So it became hard to build a piece of software that would suit a lender's technology need at the price they were willing to pay in the era of that time, right? Because again, this is still, most lenders are using an Excel spreadsheet to do stuff. They are emailing stuff back and forth. So they just didn't have sophistication internally, and they didn't need it at the time. But as more and more volume went to that private space, and certainly we've seen, I don't know, a tenfold increase at least over the last maybe 6 or 7 years in that private space. The need for those lenders became more prevalent, and this is where companies like yourself were able to step into that, because you did have that experience. You're able to build on a slightly cheaper element for a niche of lenders who needed a more robust technology, and were now at the point of willing to pay for that for their entire business operation, not just the acquisition of the file. So certainly that partnership with Automator kind of allowed us to get back into that private lending space in a bigger way, because certainly there's a lot of value in the broker community having nice, secure, easy access to a host of private lenders in the same way they do with institutionals as well.
So I was going to say, it is actually interesting how this all happened. I feel like all the stars did align all at the right time, whether it was when Lawrence and I had met Tim originally at one of the CMBA retreats, and you guys were already talking about moving to the digitization world, and we had just started acquiring clients onto the platform. And then Equifax comes out with these rules literally within a few months. There was very little time for people to actually figure out what was going on. And I have to say the stars did align really well, because in such a short period of time, there is now a true proper solution for not just the big guys who were the original, I'd say the original people who did sign up with you, who were available on the drop-down menu. And I remember back in the day, there was like 4 or 5 guys in the drop-down menu. Now you look at it today, there's almost 100 private lenders. So
yeah, even more actually. I think we're at 140 now, give or take. And certainly we're adding more, kind of 3 or 4 or 5 every few weeks. So there's definitely much more a need for that lender to be connected, but there's also much more realization from the lender that, yeah, that's just kind of the way business is now, that security is important. You just kind of have to have that as table stakes. And I always think when you're a broker, or even worse, when you're a regulator, when you look at the transaction, you're not really looking at who the lender is. You're looking at how is the consumer's information handled, like what protections were in place, how did that broker manipulate the information, where do they send it? And so the lender almost becomes a little bit less relevant in the transaction, because the regulator expects you as the broker to handle kind of every consumer, and therefore every lender in the same way. And I think lenders are recognizing that as well, as they see consumers also looking to ensure that all of the people in the transaction are holding their information well. Just like you and I would expect that of one of our colleagues, or when we go to buy whatever, we expect our information to be held well by the company we're buying from.
Right. But it is surprising that so many people in such a short period of time have jumped on board, because there was a lot of, noise being made saying, not doing it, going to keep doing it the old school way. And I'm not going to mention names, but I remember talking to a lot of people in the industry about it. And I look at the drop-down menu and I see their name on that list now. And I feel like whether they wanted to fight it in the beginning because of the beeps, I think they've come to realize that it's not about the money. It's actually about the ease of receiving that business. And from a competitor's advantage, they don't want to seem weak optically to the brokers and to their competitors by not being on the platform. You're almost doing yourself a disservice by not being on the platform.
Yeah, sure. I think, like, historically, we'd have some lenders that would want to be on the system because it gave kind of some social evidence that they were noticed and good and trustworthy, right? You're on the system, therefore you must be a good lender because you're on the system. And certainly on our side, we do a lot of validation on, well, who's part of our network. We would like to have good partners that are ethical and trustworthy, right? That's kind of the goal, so that when you come into that network, you have that inherent trustedness of what's inside the network. So I think, yeah, everyone kind of realized that, yeah, that's a good place to be. And because there was a fair amount of communication going out, and everyone was kind of getting that message roughly at the same time. So everyone's thought process was happening at about the same time. And I think it did help that a lot of lenders, because there was going to be a lot of change, they knew it was coming, and they could kind of see it for a few months down the road. They had enough time to think about their strategic objectives as a business. Right, not just how do I get the deal in the front door, what's the cheapest way to do that, but it's what tools do I need to actually run my business from stem to stern, isolate each of the steps of the transaction, determine where I'm efficient, where I'm not, where I could be more efficient, and if I can save dollars over here at the back end of the transaction, then maybe I'm more efficient overall. I can do more business, I can be more profitable, more productive, and even if that costs me some dollars per month, if I'm saving the human cost of doing that, or redeploying my human cost from basic data entry to becoming a trusted advisor, or data mining, or soliciting business, then it's far more profitable for me as a brokerage. So my return on investment of this technology is much more than I would have expected.
Yeah, and I would say, I think that's where a lot of our clients really saw the value. They looked at it and said, there's obviously a cost to being on the platform, to receive the business from Filogix. But what they realized is, like, someone still has to be paid, or they themselves have to manually import that information into a system to either to generate the docs or manually prepare the docs. And I think they started realizing, well, if I can digitally receive everything and it shows up beautifully formatted for me, saving me 15, 20 minutes of data entry. And if I'm doing 20, 30 deals a month, they've got to start running those numbers and realizing it could be thousands of dollars they're saving in man hours by doing it this way. So I think they finally started, because I remember we get phone calls in the beginning saying, we're not paying for this, we don't want to do this. We said, okay, don't, but
I agree with you. It's that, but it also creates a proper process for a business, right? Being a private lender previously, or if you're not on a platform to receive deals, you have one employee or company who's receiving these deals via email, or you have some random email set up that everyone goes in and checks to see when the deals are coming in. It's not a viable solution to running a business.
Or right? At least scaling a business.
Or scaling a business. You need a platform where the groups of employees or certain employees have access to seeing the new deals that come in. They can underwrite it. The details and the data is right there in front of them. You know, there's no errors, there's no mistakes when generating docs. I mean, it just makes it easier to run your business.
I think that the other part where, you know, Filogix and Equifax have this partnership as well, it's providing relief to the lenders that the credit bureaus they're getting are exactly what they're supposed to be.
Hey, Ryan, I have a question. So this was like, I'd say, from my perspective of seeing, it looks like stage one, right? I don't know behind the scenes, and you know, I'm not involved in conversations that you guys have as a company, but you know, is this just stage one of an ultimate goal? Are there other things rolling out in the future, or thoughts or ideas that you guys have that you want to implement?
Yes, and I think you're right. It's an evolution of the system. So I go back to when I started, 20 years ago, when communication was done on modems and phone lines, and that just had replaced faxes, which had just replaced me walking over to the branch with my application in a file folder. So I went from file folders to faxes. Then to faxes that didn't have a roll of vellum on them. Then I had a way to electronically send this on a phone line. Then I went to, well, I can send this on the web, but it's a local database on my machine. Then I went to this web-based thing. Now there's consumer information I have to consider, and laws have come in place since then. I've got to consider all of these things. So you're right. Ultimately, this path has taken us from, hey, you could write whatever you wanted and kind of wave it in the streets and no one cared, to, yes, we do need to be very careful with consumer information. It needs to be handled securely and transparently and compliantly. And again, that requirement will continue to increase. So ultimately, collectively as an industry, we're on the path to ensuring we are in that secure and transparent and compliant process. And we also want to make that a nice, easy transaction as much as we can, because certainly the need for security and transparency and compliance tends to be at odds with the ease of transaction, right? The more things you have to account for, the less it is efficient to do so. So we're trying to make that bridge. The next evolutions of these things are, well, yeah, we do now have an issue where you need to have an Equifax account and be validated as a lender to receive these bureaus securely, and that handles that part of consumer information. On the agent side, like I'm responsible for handling my consumer information well. I don't want to store all these consumers' documents on my laptop. If my laptop gets stolen, I could be in big trouble. I still don't want to email consumer information that's supposed to be held securely in an insecure manner. Right? I don't want it to be intercepted. I don't want my consumers to be maybe victims of identity theft because I have handled their information poorly. So certainly security in a system allows that, right? It takes that risk away. And as we see more brokers, lenders, even individual agents looking at their risk management, that naturally just defaults to, yes, the way to handle information securely is to actually make it secure, be part of the network that stays within that network so that all of the parts or the people that need that stuff can get to it in a secure manner, and you can track what's happening. So ultimately, yes, more changes I would think in the future, and they're all geared around how do we protect the consumer information? How do we make an efficient and a secure transaction? Because everyone should be able to be transparent on what's happening from a brokerage, from a lender, when a regulator looks at it. So it doesn't really matter what the lens of you're looking at it is. Ultimately, you want to ensure that whoever looks at you, you're able to say, yes, I did things openly and transparently, and I protected my consumers' data while I was doing an efficient transaction.
What are the brokers saying currently? Have you spoken to a lot of different brokerages or agents or brokers that have expressed, do they like this integration? Have they found it easy? Have they been giving you feedback? Those sorts of things.
Yeah, and generally I'd say yes, because it gives them more choice with a single click of a button. So again, when I say regardless of the lender, from a regulatory point of view, the lender doesn't really care what lender is being used as long as you're handling the consumer information sort of properly. On a brokerage side, if I just look up the lender and click a button and everything gets sent over nice and securely, that's easier for me as an agent. There's less involved than me printing something and saving it and emailing it and following up with the email to make sure they got it, and then waiting for an email response and doing more manual tasks after that. If I can push a button, it'll go off to the lender adjudicates and then returns, and I can just push another button and say, great, that's what I want. It's easier for the agent. And certainly as we have more integrated contact management workflow tools coming into our marketplace, right? So when we think about the lender integration, we also do a lot of work with contact management workforce or workflow companies as well. So that information is available to be, loaded from, our API solutions from expert to the broker's world. So if those things are happening automatically and easily in expert, they're also then can be automatically and easily uploaded or worked on in that CRM or that workflow tool. So the thing I can do with this one button in expert, maybe 2 buttons in expert, then saves me potentially additional work later on down the road in my CRM workflow tool as well. So when we look at brokers saying, yeah, this is pretty convenient, it generally is, because it's less work for them to manipulate the data and to manage it. From a brokerage's point of view, right, which is kind of different than a broker as an individual agent. They're thinking more transactionally, which is their natural role. As a brokerage, they're also thinking of risk and compliance. And I'm the broker of record. When the regulator comes to me, I'm the one holding the bag. So I better make sure the bag is nicely filled with stuff. It's got good handles, and I can demonstrate very clearly that I'm holding the bag well. So from a brokerage point of view, when they are seeing these responses come back, and the agent can easily click the button that says accept, they can track what lender's being used, especially in Ontario for the annual information report. That makes it easier for them administratively. It makes them more sort of trusting of what's happening, because they can see what's happening in their brokerage more easily and then report on it more quickly, which is also the benefit of all.
Have you ever gotten the call from the broker that says, hey Ryan, I'm trying to submit a deal to ABC lender. I can't find them on the list. Where are they? Why aren't they there? What's going on?
Yeah, certainly we do. So it's a reasonably regular occurrence that a broker will say, hey, is lender XYZ on the list? Like I need to submit the bureau. As a broker, I can't email the bureau out. I've got to get it to this lender.
Yeah, right.
Are they on the list? And sometimes the answer is, oh yes, they are, great. And the broker's like, fantastic, that's great, I can just go do that. If they're not on the list, the broker's like, well, how do I get them on the list? How do they get there? So obviously, there's a conversation we had with that lender as to the steps they have to do and where they have to go. And, they have to chat with one of you guys. They have to chat with Equifax. But increasingly, brokers are saying, well, given that I know I have to handle my consumers' information well, particularly the credit bureau, I need to ensure that my lender partner is able to help me on that side, right? So what is it that I need my lender to think about so that I can get them the information they need to be able to underwrite the deal and then hopefully fund this deal and put a consumer in a house?
It's almost like there's like an onus on the lender to almost be responsible in getting connected in some capacity or another and be available on the Filogix drop-down menu, because if the brokers were, like you mentioned, the onus on them to be compliant from the Equifax perspective, from the from keeping personal data private and sending it to only where it needs to go, those guys need to be aware that if they want that business, they're putting the broker almost in a bad position by asking them to do something offside or off the grid, just because they don't want to be digitized on your platform.
Yeah, and I think, from a brokerage point of view, when we look at how, Equifax rightly expects you to handle that confidential consumer information securely, right? As the consumer does themselves, you never want to jeopardize a career over a transaction, right? So you want to ensure you're doing things well, and that the brokerage ultimately is responsible for what that looks like. If you're unable to solve a client's need because the lender you're looking for, can't receive the information, then that limits the options you have as an agent. It limits the choices the broker has, the consumer has in their application. So certainly the more the agent can look at a wider range of choice of lenders, the better for the consumer. And certainly from a lender's point of view, the more exposure they can have to those brokers who are looking to send that application in, I think the better. I would suspect this is the case. And I think you'll probably have some better info on it than I, that you were likely seeing more lenders getting more applications from more different brokers who they didn't know previously, because they're now available on the system and it's easy for that agent to be able to pick them. And advertising emails from that lender to an agent can just say, well, just click find me on the list and click there, and I'll get the application. That makes it easier for the agent because they already know that behavior. They don't have to do anything different. They're just picking that lender name. So I suspect that there are more lenders getting more business as a result.
We have been hearing that response, right, Laurie? It's been
absolutely, and I suspect that as time goes on, the lenders who are not adapting to the new world, they're going to see their volumes are going to they're going to go down. They're going to decrease, and it's simply based on what you were saying, where it's, hey, I want to submit a deal to this particular lender, but I can't. And now it's that internal struggle of, you know,
do I follow compliance?
Should I try and do something that's, yeah, I mean, I don't want to do anything wrong. So you know what? I know I usually deal with this lender, but maybe I'll try that lender today because I can click this one button, send it over, you know, hopefully they'll say yes. If not, I'll see what other lenders are on that list. But I think that, you know, it is still relatively new. It's a new part of the system. And, you know, as quickly as we think that information spreads, there's always people who are living under a rock who don't get that information until many months later. But I do believe that, you know, come the new year, if you're not on a system, right, if you're not on that Filogix dropdown, like, it's not going to be a good situation, right? Because your trusted brokers who you built a relationship with, they want to do things right, the right way. You know, they want to make sure that they're staying compliant. You know, you built a relationship with these. Yeah, they're going to have that internal struggle of, listen, I love dealing with this lender, but I can't get them the deals properly.
Here's the issue.
So I have to find a new lender now.
And here's the thing, Equifax, I was going to say, Equifax conducts spot audits on people. And I think they're going to be doing more of that these days, because they're going to be aware that brokers are still sort of not following all protocols. And I think certain guys will be made examples of, and they'll lose their permission to pull Equifax. And then perhaps maybe at that point in time, the light bulb will really go off and they'll say, I can't submit anything ever off the grid ever again, because it's not worth my livelihood. My lender, if he wants my business, he better get with it. Otherwise, the business is going somewhere else. There's 140 other lenders who are happy to take my business.
It makes no sense at all for a broker to take risk. Zero sense.
Zero. There's zero risk.
What's the point? Find a lender on the list, work with lenders on the list. That's the bottom line.
Yeah, I think it almost becomes the table stakes of entry into the industry as a lender is being that security. If you're a lender, you really have to act as it, right? And there's just the table stakes now that have changed. The table stakes, you know, in past years were lower. There was less sophistication needed. There was less sort of oversight required. There was less stuff you had to do. But that's just changing. Just as society has changed in kind of all manners, there's just more stuff to do now. There's more table stakes. You know, I think when I was, you know, back in high school, which was back in, got late 80s, right? Where your phone line was the communication, right? You saw your friends at school and either they knocked on your front door or they called you. And if you happened to be home and someone picked up the phone, you could talk to them and you'd all agree, yep, you know, we will meet Friday night at 8. And either everyone showed up or they didn't. And that was a fairly low table stake now in terms of how I handled and work with my friends. Now I've got, I don't know, 87 different social media apps, instant cell phones, voicemail. I've got all sorts of ways to interact and to change and decide what's going to happen and to play around with what goes on. The table stakes of me just being part of society now are larger. I'm keeping track of more things in more places with more people, and they're all doing the same stuff. So as the table stakes have raised in society in general, so too have the table stakes raised just for lenders and brokers in the system. And at a certain point, if you don't make those table stakes, which is again, secure and transparent and compliant, you just won't be part of the transaction because you won't be at the table.
Yeah, I couldn't agree with you more. Now, I wanted to actually shift and ask you something in regards to what Filogix is today as a platform. And before, back to the mortgage base days. And it's funny you say that because I actually used mortgage base as a mortgage broker 16 years ago. And I remember, I think just around that time later, it switched over to Filogix. I wanted to ask you, back in the day, Filogix was just known as the only broker submission system. It's the only way to get data to a home trust, a Scotiabank. You guys have sort of taken a little bit of a different direction. You've almost become like a connector. Talk about that a little bit, Ryan, if you don't mind.
Yeah, I would say not almost. That's quite accurate. So it is looking for that connectivity. So we talk about the Filogix mortgage marketplace, which is really just the connections of all things within the industry. So when we were, going back sort of 7 or 8 years ago, we definitely had a spot where we just didn't innovate as much, right? There was a bit of a lull. We didn't do as much as we needed to. And certainly as technology was increasing and it became more readily available to individual brokerages or individual agents, we got a little bit behind, right? We just said, this isn't the path we want to be on, but we're going to have to readjust our path, and it's going to be a lot of work behind the scenes. So we spent a lot of time, a couple of years really, rebuilding a lot of our infrastructure and architecture internally to become the foundation of what ultimately is the connectivity world you see today. So yeah, historically, experts, past our kind of old legacy programs, Expert was the one thing that everybody used. But as everyone moved to more customization and configuration, and I want to have, do my business my way, that just necessitates a change in how we think about how we do what we do. So a lot of work and effort went into building connectivity that allows lots of different people to connect to our marketplace, to our hub, if you like. And my analogy might be, in the last little while, we have decided that we do highways really well, right? We do paths that are very good. They'll take you to all sorts of places. We do a little bit with cars, but there's lots of people that make cars. So if you want to drive a car that's an F-150 truck because you got a whole lot of stuff, you want to have a sports car, convertible, you want a BMW, you want a jalopy, doesn't really matter. You find the car that you like to drive, and all those cars will drive on a nice, smooth, paved highway and will take you to the places that you want to get to. Because people were starting to buy cars, we thought, well, great, that's okay. It's okay to buy cars. Let's make it so that all those cars can drive on our highways nicely, so that we have lots of choice for the broker community, because ultimately choice drives innovation. It drives efficiency and productivity. Stagnation doesn't help anybody. And if you open up and allow more people in to do more things, to do business their way, to be more efficient how they do it, to attract more clients somehow, to manage those clients better, to be better brokers as businesses, then that kind of raises everybody's boat, right? Everyone floats higher on a rising tide. If we can make a broker be able to do business their way better, then that's a good thing. So we spent a lot of time and effort doing that. And that has allowed a lot more choice into the industry. Ultimately, we aren't so concerned with what the broker uses as their kind of front end. We aren't so concerned with what a lender uses as their software. Neither the broker really cares what you use as a lender, and vice versa. The lender really doesn't care what you use as a broker software. Use the best thing for each other, and we'll connect them all in the middle, so that the ideal state is whoever's using the best tool for the job they need to do is matched with the other person using the best tool for the job that they do. And ultimately that has to make a more efficient and a stronger community and a stronger industry.
It's interesting.
How many people are at Filogix? How many people work there?
So as part of sort of a Finastra globally, right, there's about 10,000 people working for Finastra. Wow. When you kind of move down into the individual business units, I'm going to say there's about 60 people in the Filogix world. And some of those are kind of shared services of other groups, but I think, people that touch stuff, and this is, we've got our client services team and our development team and QA, and there's other people, there's shared marketing and infrastructure and architecture and software development, myself, right? So all those, there's about 60 people all over that would be part of that, we'll call it direct Filogix impact.
Like
and a lot
Team
of those,
Canada, basically.
Yeah, it's in Canada. And then again, because Finastra is a global company, we can access sort of global resources for some specific functions that are maybe kind of one-off things or particularly centralized functions that Finastra globally uses. So
it's interesting. Is it similar outside of Canada? Like they use it as like a broker software to submit deals? Is it the same type of business?
Yeah, I mean,
not to talk about anything outside of what you do. I'm just more curious than anything.
Yeah, so Finastra basically is the third largest global fintech company with operations in basically every country that exists. When you look at the top 50 lending institutions in the world, we're into 48 of them. The 2 we're not are nationalized banks. But there are tens of millions or maybe hundreds of millions, probably a better descriptor right now, of people that will be somehow impacted by something that Finastra does globally, right?
Wow.
You think of the global banking system, someone wants to lend money or borrow money or have a payment or move a payment or have security in the globe. We're part of so many of those things. So behind the scenes, there's a vast enterprise that is Finastra itself across every continent. I don't think we have a bank in Antarctica that we would service, but other than that, it's a huge enterprise. In the Canadian world, we're a little bit, I can say a little bit unique in that we've been running as Filogix for so long, and the Canadian market tends to be more regional than you might see when you think of all of the U.S. or all of Europe. When you look at California itself, there's we'll say there's nearly twice as many people in California as is Canada. So we have an appropriate scale, right? The U.S. enterprise of Finastra has all sorts of products to serve the many thousands of banks and all the mortgage brokers that are in there, just like we've got the same in Canada. But the 2 are very different, right? The U.S. mortgage system, if you like, is just functionally different than the Canadian one. So those 2 enterprises are separate.
Did COVID have an effect on your business at all? I mean, you guys are a tech company. I'm not sure what kind of effect it would have in terms of maybe employees not being able to go to an office, but anything that maybe was you didn't see it coming, or
I think we were able to pivot actually very well away from physically being places to being wherever, and I think that's kind of a lot of the nature of mortgage professionals. I think a lot of them like that flexibility where they don't have to be sitting at a desk from 9 to 5 in a physical location. They can be wherever they are. With a laptop and a phone, they can be working from home, and obviously many do. It's a very good lifestyle to allow that. So globally, we were able to transition, I think, quite readily to that virtual environment. And myself, I've moved to Calgary from London in 2001. So I've functionally been a virtual employee since 2001. The biggest change for me was I'm not traveling, right? Because there's no events going on where you're traveling to different broker events, which would have taken up a lot of my time before. But now I sit at the kitchen table, I sit in my office in the basement, and I can talk to people, I can provide advice, I can connect to them via Zoom or anything you like to be able to provide the knowledge they're looking for. And again, they're the same thing. They're on their boat or in their basement looking for the knowledge, and they're passing it on to the consumer. So as an enterprise, we shifted very easily to remote because so many of us were generally remote anyway, right?
Do you enjoy staying home, or do you miss being out on the road, shaking hands and meeting people?
I do miss it for sure. I really do like the conferences because it allows you to see so many people at one time, and there's only so much you can get from a phone call or an email. They're nice to have as touch points, but you really want to see the people. You want to go to the places where there's events, and you can only go for a dinner or I don't know, whatever it is, a ball game, a hockey game, a conference where you're learning about stuff, because you get more of the relationship when it's not just a functional email, right? When you're talking to people, you have way more, you have way more connection, I think, and it helps that I've been at this for a long time, and there's people I may not see for a long time. There's actually people I've known for 20 years I've never physically met, but we know each other very well. But I would really like to be able to meet those people at some conference somewhere. So the more we can get together, once travel normalizes again and we're okay to do so, then I think there'll be a lot of people happy to be able to get out and see everybody. Because I certainly miss. I don't miss sitting in an airplane for like 4 hours every couple of days, but I definitely miss people at the other end of that the airplane ride.
Yeah, I agree. I miss it as well. I mean, it was a big part of our business, being able to go and sell, I guess you want to call it selling our platform to lenders and letting them see what we're all about. I mean, we're lucky that we were kind of at a stage where the growth was there. So, I mean, we get a lot of internal leads. People, they come to find us more so now than ever. So, but no, it was always nice to be at the shows and see people who are on our platform, and they always come and seek us out. Hey, what's going on? We love your platform. And because it's hard to keep touch with everybody. it's hard to have that in-person conversation.
Those were the times we would literally just re-solidify those relationships.
Yeah.
And it's funny because when we started, we'd go to the trade show, our first coming out trade show, you look around, not a single client, all the lenders are not using the system. And then towards the end, the last show, we went to, I forget, I think it was the CMP show. And we looked around and we said, 70% of the people in this room that's exhibiting is using our system right now.
Yeah.
And it was nice to be able to just say, oh, every second or every third or every second guy or every two guys are literally on our system or signed up now or about to sign up. And it was cool to get that reassurance as well. Like, we love you guys. It's awesome to see you. And we just like to see how their businesses are doing as well. That's probably the hardest thing for us too, especially for Lawrence and I, because we have that's sort of what we've been doing for the business, going to the golf shows, meeting all the people.
Joe is a social butterfly. He needs to be out and about. He needs to be shaking hands and kissing babies. That's what Joe loves to do. And it's killing him right now to be at home. Killing him.
Killing me.
Well, I think there's so many people that are so good at that in our industry, right? They are very good at meeting people, going out and making the relationships and having that. And I think the more that we get to see each other, because again, the people that I don't see, or maybe there's somebody new that I haven't met in person before, the first time you see them, at whatever trade show or event, and you've been talking with them for a while or emailing, it's you have a really nice, oh, this is great to meet you person. Sure. Very rarely do you sort of meet someone in the street and go, oh, thank God you sent me an email, right? It typically is the other way around, right? That written communication leads on to a better kind of visual in-person communication. And then the next time you get an email for the person you've met or a phone call, you're like, oh yeah, I understand more about you. I know more about who you are, maybe some of your interests, the things that we have in common. And now it's easier to take that call. It's better to take that call because you're now a friend of theirs, not just a name that appears on a list or on a phone call, right? So I definitely miss going out to seeing people. And it is really good to have I think one of the things I really like is the big trade shows. We've got hundreds of people milling around. A lot of ideas are changing around. People are saying hello, but you can just watch and see how many individual connections are between the people within that trade show, between either the booths or the people coming in, whether you're broker or lender or partner or technology, and kind of recognize that, yeah, that's like when you look at the people talking to each other, and then I think of what our kind of marketplace, what our ecosystem looks like, that's what we're aiming for, right? Like I know they're talking to each other physically right now, but they're both going to go back to their kind of regular work jobs, and they're going to be on computers, and those computers are going to be talking to each other in the same way that they were talking to each other. And it's again in our network, and it's pretty cool to see. I think it's a good analogy from ecosystem to trade show interaction and all those connections.
Is there any statement you want to make for people listening? Maybe the outlook for the next few years, maybe a plea to lenders who are not on the drop down to jump on. Anything you want to kind of finalize with?
So I would say I can use an analogy because I like telling sort of sport analogies. I do a lot of backcountry skiing, right? So for those who don't know, that's where you put skis on your feet, and you've got little skins, and you walk up the mountain, and you make sure you're not on the avalanche path, and then you get to the top of the mountain, and you get to ski down, right? 90% of this effort is just getting up to the top of the mountain. As you're going up there, you're kind of looking at the lay of the land. You're seeing what conditions are going to be ahead of you at a large scale, and as you get closer to small scale. But there's a certain point where you're going to come up to that kind of the lip of that hill. There's going to be a rollover. You can't quite see what's immediately below you, right? But you've kind of scoped it out on the way up. You know what's going to happen. You know things are going to be there. You got to make that first kind of leap and say, I'm going to trust my navigational skills that have got me thus far. I'm going to trust that as soon as I go over that roll, I'm going to know more or less what I'm going to find there because I've done my work on the way up. And if there's something in the way, if there's a tree or a rock that I'm seeing, I can ski around it because I've got skills and talent. I've experience that allows me to navigate that area. And then ultimately, I open up in this great big powder bowl and these fantastic swooshing ski lines down these fantastic powder bowls, and it's a fantastic, fast, awesome ride. And I think we've kind of come up, and we're mostly now just finishing that ascent, right? We've seen all the landscape. We know what it looks like. We've seen it up close. We know there's more stuff going to happen that we can't quite see, but we kind of know what it's going to be. Like we know there's going to be some more stuff around security and transparency and compliance, just like we know there might be a tree or a rock there, but we're coming up on that role. And we know as soon as we go over that role, we can adapt to the environment because we're prepared for it. I think that's the big thing, is take a look now, whether you're broker, lender, look at the road that's coming up, prepare yourself what's coming for the next 6 or 12 months, knowing you're going to get there. And then when you do make that rollover, you can use your skills to avoid any of those minor obstacles that you kind of might have known were there, but couldn't really see at the time, and then have smooth skiing after that.
I love it. I love it. Ryan, thank you very much for stopping by and giving us some insight on your side of things, because we only hear about our side, right? So it's nice to get a perspective from the broker side, the Filogix side. You are in Calgary, right? Are you in Calgary?
Correct.
Yeah.
Yeah, I'm in Calgary. You can tell because of the inch of snow in my backyard.
That's right. Now we always end the show off asking questions about or a question about pizza. Surprisingly, nothing to do with anything that we're talking about. Never been to Calgary. Is there a spot that I should know about? If I'm in the city, I got to go check it out.
Yeah, I'm going to give you two, right? Because they're kind of either ends of the city. One is in a little spot called Inglewood, right in the neighborhood of Inglewood in Calgary. It's called Without Papers. Little pizza place, right? And it was, second floor of this really kind of cool looking restaurant, kind of wall of shops and stuff. But Without Papers, it was started by the, I guess we'll call it the siblings or the children of the parents who had come to Canada sort of back in the day, and they came to Canada as immigrants and they had no papers. So the pizzeria as Without Papers, a really awesome spot, good TVs, a whole bunch of good selections of pizza. So that's one in the east. And then if you're ever going for takeout, then Greco's Pizza, totally unassuming little restaurant pizza takeout stuff, but they make fantastically good pizza. And I'm almost going to recommend, they've got like a cheese and kind of chicken with seems like a celery salt topping on it. I don't know exactly what they put in it, but it's like eating cocaine of pizza. So Greco's takeout and Without Papers to sit down.
Awesome.
You heard it here first. If you're in Calgary, go check out those places. Tell them that Ryan sent you. They may or may not know him, but just tell them that he sent you anyways. You're going to love it. Ryan, we really appreciate your time.
Ryan.
Thank you for stopping by with us.
Excellent. Thanks, guys.
Cool.
We'll chat again.